Good morning. Welcome to IG's early morning call. It's Wednesday, the 22nd of March. Let's take a look at the headlines as you wait today's conclusion of 2 days of meetings at the Federal Reserve. The Federal Open Market Committee will announce interest rates at 6 p.m. today, UK time. There is an 85% chance of a move by a quarter point, 15% chance of no move at all. That's according to the markets. Meanwhile, markets have been beaten in terms of forecasts for UK CPI, RPI and PPI, all coming in stronger than expected. The big question is, to what degree will it influence the Bank of England interest rate decision tomorrow? And on the earnings sheet late last night, Nike rising all sessions on the IG platform. It beat its overall forecasts. Third quarter earnings coming through, but one of the big headlines was that excess inventories continue to be a drag on the numbers. Take a look at volatility, down for a second day yesterday, but we are creeping up today. We are now expecting a little bit of a turnaround negatively on the London markets, which I'll show you in just a minute because of that higher than expected inflation print across the board. You can see that we've been bouncing off the blue line here, which is the 100-period moving average, currently trading at 23.20. In the grand scheme of things, we're still towards the bottom end of what we've been seeing over the last couple of years or so. But the move at the moment, couple of year or so, I should say, actually. But the move at the moment, as I said, beginning to price in somewhat of a little bit of a move around here, certainly in the London markets. And as we wait that interest rate decision later on today from the Federal Reserve. So London markets, let's take a look. This is the daily candle chart. What I want to show you here is the chart over 10-minute candles. And you can see clearly here on the far right-hand side, the drop in response to that move that we've got in UK inflation. I'll take a look at the nitty-gritty in just a couple of minutes' time and what it's doing to sterling. But you'll remember yesterday that we saw the FTSE 350 banking sector rebound for a second day in a row, and indeed closing at 34.06. Now, the big question is how banks will open this morning. We're almost certainly now going to see the Bank of England move on interest rates tomorrow. The degree is what's really going to be happening. But if we do get a strongish rise from the Bank of England tomorrow, technically, it is good for banks because banks get that net interest rate margin and they're able to lend at higher levels, their margins are increased, and it does help the overall sector. But we've got this situation, of course, where the UK economy is very close, teetering on the brink of going into recession. It has been a little bit stronger than had been expected in some of the data prints we've seen recently, which gives some hope that a recession could be averted. If it is a recession, could it be a shallow recession? But I think if the Bank of England continues to charge ahead on interest rates, it's going to crash that. The recession will hit and there will be a drawback and banks will ultimately be hit. Banks have been lending because they've been told to do so by central banks through quantitative easing, and they've been given money that must be lent into the market. And they've been lending to people that, quite frankly, can't sustain higher interest rates. So I think there's two big stories going on here in the background. And we are looking at the moment, at least, to see a slightly lower open on the London markets. Now, the same sort of twist is occurring on the German DAX. Earlier today, when I tweeted about this, I was fairly confident that we were going to get a slightly stronger start. Not now. I think there's a little bit of a negative hint to the air on the markets across Europe now. French markets very similar, down 0.4% on from the 24-hour market close yesterday, and we're now eating into the gains that we saw in yesterday's cash session. So I think there's a little bit of frailty going into the start of today's European session, looking for a lower start at the top of the hour. Let's take a look at what's been happening overnight in the Asia-Pacific markets. The Japanese Nikkei 225 back in the session today after yesterday's holiday. A little bit of catching up to do, 1.9% up. Hang Seng Stock Index, when last look, was up 1.75%. The close on the Australian market showing a gain of almost 0.9% overall in the session there on this midweek trading day. Yesterday, US stocks reacting to Janet Yellen's comments, US Treasury Secretary saying yesterday that the government was ready to provide further guarantees of deposits for crisis-hit banks. And this, as I said, saw the London FTSE 350 banking sector up, banks up across the board yesterday. Still some question marks about the Republic Bank that many have been talking about, and the fact it's got that injection from the US government. It's got that injection coming through from the banking sector overall, with the big banks coming in to support it. And we saw Tex, the best behaving yesterday in terms of its overall performance, up by a margin of almost 1.6%. Late last night, we saw Nike come through with earnings, and that saw a little bit of a rise in its overall performance. I want to show you the chart here of the S&P 500, second day in a row of big gains yesterday, closing out at levels there not seen since the 7th of March. And into 24-hour markets, you can see we are starting with a little bit of a negative hint to the session. But I think it's techs where we have seen this outperformance on the upside on hopes that the Fed may possibly, slim hope, of not moving on interest rates tonight. Personally, I don't think it's going to happen. I think we will see a 25 basis point rise, which is what the markets are looking at. 85% of the markets are pricing in a 25 bips rise for the federal funds rate. But we are very close to the highs that we saw back now on the 2nd of February, where we'd seen that market gain and take us back into bull markets. So the Nasdaq, as I said, the better performing markets overall against the Dow and the S&P 500. And in fact, you can see if you look at the Dow, whilst we've seen 2 days of gains, again, we've got a red candle here starting us off on the 24-hour markets today, away from the losses that we saw taking us back down into correction as at the low point that we saw back on the 15th of March. So that's the situation in terms of where we are overall in the markets. So tonight at 6 p.m. UK time, the FOMC, the Federal Open Markets Committee, will draw the conclusion of its two-day meeting by announcing its interest rate policy for the current period. Fed Fund futures show an 84.1% chance for 25 basis point rate rise. That will take the target rate to between 4.5% and 4.75%. It's 9 percentage points higher than that yesterday, showing an indication that the markets are believing that there is this move towards that 25 bips rise later on today. If there is a clear majority, the market arguments are certainly on both sides. On the no move camp, you've got Goldman Sachs arguing the banking stress tests will cause a tightening in lending. That is essentially the same as a rate hike. Adding that, the historical record suggests that the FOMC tends to avoid tightening monetary policy in times of financial stress and prefers to wait until the extent of the problem becomes clear, unless it is confident that other policy tools will successfully contain financial stability risks. Let me take a look at what's happening with the dollar basket before I move on. You can see here, this is the dollar basket moving lower. JP Morgan standing with the majority and expects a 25 basis point rise, because postponing a move until May would threaten the credibility of the Fed in its fight against inflation. Now, the big question is how do you trade this move down in the dollar basket? My favorite way of doing this is against the euro. This is the euro after yesterday's gains for 4 days in a row, taking us above the 50-period moving average and up against this line of resistance at 107.87, which was the highs from a long while ago, back in May 2022. I've still got that line on this chart, but it did stall at that point yesterday. Got a little bit of an easing back today, dollar slightly higher today on that expectation that the Fed will move by 25 basis points. The big question is, what will it say thereafter about the outlook for what's happening in terms of the interest rate picture in the States? UK inflation has just broken, and we have seen it rise again, very strong across the board. Consumer prices up, producer prices up, retail prices up. We were expecting gains, but nothing like as strong as we are. And we're beating the numbers that we saw back in January. 10.4% headline annual CPI, beating estimates for a drop from 10.1 in January to 9.9% expected. Likewise, core annual inflation rising 6.2% in February year on year. Forecasts there had been to ease from 5.8% in January down to 5.7%. None of it. Jeremy Hunt, the Chancellor of the Exchequer, acknowledging higher interest rates are the cause of volatility in financial markets, but he supports a further rise this week if the Bank of England deems it's necessary. And I would venture to suggest that it is necessary given this current rise in prices. 122.62 is where we are at the moment for sterling against the US dollar. I want to show you the 10-minute candles here just to explain what the reaction is in the market. And you can quite clearly see it here in sterling, gaining a considerable amount of relative weight that we've seen in this market. These 10-minute candles showing the breaking news that we've seen there, holding onto the gains, as I said, at 122.62, where we're standing there at the moment. But I think the big move of the day is likely to happen this evening at 6 o'clock. Axel and I will be live on the IG platform, guiding you through the Federal Reserve interest rate decision, what it means, how to trade it, and where we go from here. So do join us live on the IG platform tonight at 6 o'clock with that news out from the Fed. And it's the Bank of England tomorrow. And as I said, in current interest rate environment, it's likely to weigh on the bank decision. Tomorrow, the bank is expected to move up for 11th consecutive time by 25 basis points to 4.25%. So that gives you a picture of where we are in terms of inflation, interest rates, and where things could well move today. And I think those two events over the next 18, 24 hours are likely to continue to steer the markets. Let's take a look at a couple of companies worth watching for. Fevertree, I want to begin first of all with. This is the drinks company. Here are the numbers. Adjusted EBITDA falling 36.8%, £39.7 million. Group says gross margins were impacted by inflationary pressures. It's flagging the impact elevated energy costs have on glass bottle prices. Glass is becoming a real problem for these companies. We're encouraged to use glass more than plastic for obvious reasons with the environment. But then again, these companies are given no help in putting their stuff into glass bottles. What they could do is they could put the price up and then say to people, we'll give you some money back if you give us the glass bottles back. No one's ever going to do that. No one's ever going to buy the product if you increase the prices to give people an incentive to take bottles back. It's kept its guidance, though, unchanged and announced a 2% increase in its ordinary dividend. So where do I expect this to go at the start today? I think any upside is very difficult. 1075 is where this stock will open today. And I think now with this swing to a negative and the potential for a rise in interest rates just adds the impact of this increased inflationary pressure for people. And people, the consumer, will look to buy cheaper products. There's no doubt about it. If you want, if you still drink gin, and let's face it, there's even more of a reason now, perhaps possibly maybe to do so. If you are a drinker and you do add these soft drinks to your gin, then yes, you're going to look for a cheaper alternative. Many suggest that Fevertree has a taste above others, but I think ultimately price will be the thing to watch out for. Let's look at another stock worth watching. This is Vistry. Now, this has still got a ticker here, BVS. This was the old Bovis Homes business that merged with Linden Homes from Galliford Try. And the company's actually come up with a fairly robust statement this morning. It says that conditions for house building were improving in its sector, in the housing sector. Homebuilder reporting a 21% rise in annual profit, beating market expectations. So under normal circumstances, you put your stop down here just under this recent candle move down, 710 pence, probably a good place to go if you're long on this, at 729.5. But I'm expecting a drop in the markets today, and I think this is going to impact. It doesn't matter whatever the positive story is. I think this capping out at the 200-day moving average, which is where we saw earlier support, and I think now resistance, and there's a potential here for this stock to drop as well. How far down it goes remains to be seen. It opens at 729. £7 would seem a likely area of support, which is the 100-period moving average for Vistry today. If you are short on this with a stop above the 750 level, it's difficult to know where this stock is going to go. Good earnings, good outlook, good reported numbers, but the markets with higher interest rates in the pipe almost certainly expected. It's going to be a pressure for home builders. One of the stocks on the IG platform that rose late in the session yesterday was Nike, the sportswear manufacturer. It rose all sessions last night after the company beat Wall Street expectations for its fiscal third quarter numbers on earnings and revenue, though its margins have continued to shrink as investors watch for its direct-to-consumer strategies still to pay off. Let's take a look at the figures. Earnings per share coming in at 79 cents compared to 55 cents expected, driving a net income of $1.2 billion compared with $1.4 billion or 87 cents per share this time last year. Revenue is also better than forecast at 12.39 billion against 11.47 billion forecasted. Meanwhile, Nike, like other retailers, have been in the process of offloading a glut of inventory brought on by supply chain disruptions and shifting consumer demands that it's been weighing on its margins. But I think overall the story did produce this rather interesting rise in the stock yesterday. If you look at the all session stock on the IG platform, you can see that massive spike that we had. And in fact, we even rose above this line of resistance at $131.30, which took us at one point yesterday, albeit briefly, to levels not seen since the 22nd of April, 2022. Then came some market reality, But we did nonetheless see this stock up 1.2% at the close overall on the session in yesterday's trade. The chief executive of Nike, John Donahoe, told investors last quarter he believes the company has passed its inventory peak. Gross margins were expected to take a hit during the holiday quarter as the company continued liquidation efforts and promotions. But since then, things have been improving. And this has been the end reaction to Nike's announcement late last night. The stock up in the end, up 1.2%. Let's move on to other areas of the market very briefly. With concerns about the outlook for interest rates, of course, one continues to question the potential for downside in terms of overall growth. And if this does happen, then you're likely to see further pressure brought about on some of the minerals companies, oil especially. Let me show you what's been happening over the last couple of days. There has been this little bit of a rebound in the price of oil. We're trading up over $69 a barrel, but comfortably below that $70 a barrel level for US crude, 69.02. And if you are thinking that interest rates do still have to rise and considerably, and it's going to impact on growth, then obviously you want to be taking this price of oil further on down. Yesterday evening, the API, the American Petroleum Institute, revealed that crude oil stocks increased by 3.25 million barrels last week, taking the total gains to more than 59 million barrels so far this year, which means there's excess oil in the market, which means I think there's a reason to sell this market down further. Let me just quickly return to the charts and just end on what's happening. Spot gold down for, let's call that a third day in a row, because we saw that big spike up, didn't we, beyond 2,000 on Monday this week. Since then has come this pullback to 1940. But I think the upward trend continues for the price of gold as gold continues on this march higher as its normal safe haven type of area of the market. Just wanted to end on Bitcoin. It's consolidating now at its recent high point. This has been an excessive story for Bitcoin. If you can't trade Bitcoin because you're not a pro client, even pro clients don't like trading Bitcoin, sometimes because of the extreme volatility. We've seen a 45.9% increase in the price of Bitcoin, and likewise Ether, another one we quite often follow since the lows we had back on the 10th of March. And if you can't trade that, then the obvious thing to look for is some sort of proxy. And we quite often refer to Coinbase as being a really good proxy to follow. This is all sessions on the IG platform, and yesterday ended up at levels pretty much not seen since the 18th of August 2022. So there are ways to trade these markets if you look at alternatives other than those markets that perhaps maybe might be more difficult to take a bite of. That's it. We've got about 12 minutes to go before the start of today's European session. Looking for lower start now across the trading day. Do watch out for a continuation of trade on the currency markets ahead of that US central bank interest rate decision at 6 p.m. today, UK time. So and I will be live at 5 to 6 tonight to take you through that decision. Please